Hi folks, welcome to another episode of Shit You Wish Your Building Did, a show where we take an unvarnished look at the technology in our buildings. In this episode, I'm talking to Michael Grant from Metrikus and Smart Buildings Bootcamp about the realities of running a PropTech startup, from raising money, hiring a team, to pitching to clients and securing sales contracts. What makes the PropTech industry different, and what is the state of the market in 2025? Don't forget to subscribe to the channel. Also, if you like the episode, there's a button specifically for that down below. Please click it. So let's jump right in. Michael, welcome to the podcast.
Thank you, buddy. Good to be here, as always.
Yes, absolutely. So who better to talk about the realities of startups? And that's, I think fascinating subject all in itself. We've only got, 30 minutes today, but it'd be really cool to get some insight from you. And I'm sure lots of people it's going to resonate with a lot of people and they're going to find it interesting. So maybe just let's start at the start. Tell us about Metrikus, how you came to be there, how it was founded, and maybe the first couple of years.
Yeah, so Metrikus was founded probably, it must be 6 years ago now. And it was a previous company before that I was working with that Cisco actually brought me in to help out. So software platform, it was first just on energy many moons ago. And then when I started to work in the space, and I'd never been in this space before, real estate and things like that, I built data centers and done lots of other things. One of the things I realized that when we were talking to customers, energy was one piece, but then they were asking to do more and more. So I kind of got the idea of, let's not just do energy, but let's do the other things that people have started to talk about, which was occupancy monitoring and indoor air quality and linking other systems to bring data together. And so that's what formed Metrikus, was not just to be an energy platform or concentrate on the BMS and energy side, where there were already lots of players and players doing things quite well, but it was, let's do something else within the building and also on the tenant occupier side rather than the building owner or landlord side, because that's always a very competitive space already. So hence growing things out, growing the connectivity within the buildings, within the tenant space, rather than just concentrating on energy.
Mm-hmm.
So, yeah.
Okay, looking back now, tell me one thing that you'd wish you'd known when you'd started.
How slow moving this whole industry is and how disparate it is, and that partnerships are really hard. So previously, having done things in unified comms and having a unified comms software business, working with Cisco and others, they partnered very quickly.
Mm.
They realized that the software that we had would add value to Cisco and help them with their sales of products. That partnership worked quickly. I think the real estate industry, whether you're on the landlord or the tenant occupier side, they're not really that joined up either, but partnerships are hard. Everyone's trying to sell their own wares more than anyone else's. And that's something I wish I had have known, of how hard that would be and how much time it takes to ramp that up and try and get everyone on the same page, because I still don't think everyone's on the same page in the industry.
Mm.
That's what I wish I knew before I came into it, because that's trying to push all of those doors open has taken a long time. And I still don't think our industry does it well, but it's something I talk to you about and I talk to others about regularly, is how do we get partnerships to work better? I wish I'd known how hard that was right at the very start, because it takes a long time.
Mm. Talking about taking a long time, I also hear a lot about the long kind of sales cycles with commercial real estate. And again, for me, that sounds like something particularly painful for startups. So, is that something you've experienced? If it is, what advice do you give for people who are dealing with that?
There are long sales cycles on both sides of the fence. And what do I mean by both sides of the fence? So if I take companies that like Switch and Code and others who do the landlord building owner side and do the energy and HVAC side, or I take companies like Metrikus and a few others that do the tenant occupier side, those sales cycles are very long. how do you shorten all of that? I think if you don't have to buy hardware, number one is a big one. People are moving away from buying hardware in our whole industry, whether IoT and everything else.
Mm.
I think the sales cycles are long because the priority of businesses changes, and the real estate and FM side doesn't get as much attention within a business as some of the other key areas that might distract customers.
Mm.
So number one, if you have to buy hardware, that elongates any deal and any sales cycle. That it just stretches everything out. If you can do anything with just software and pro services, it shortens the sales cycle. But also, there are so many companies trying to sell their wares to the customers in this industry that they end up talking to lots of people. So, and also, if you're looking at the scale of some of the projects that we're talking about, you're talking about a lot of money in some instances. So they've got to try and find that budget, and that budget gets robbed by others, right? Priorities get taken, and we've seen it as Metrikus that we've won projects, and then 6 months later, trying to do some deployment, someone said, "Oh, we need that budget for something else, for another priority." What priority that is, we may never even find out, but they've just say, "There's 750 grand you had allocated, you've got 200 of that, and someone else has taken 550, so your project's gone from this big to this big." So I think there are multiple reasons why there are long sales cycles. Number one, priorities. Number two, if you need hardware. And number three, trying to get the rest of the stakeholder buy-in within businesses is hard. So
Right. Yeah. I mean, again, so like where, I suppose that's about selling in as well. Is there
yeah,
is there particularly where you think, that's the sweet spot for smart buildings, is a particular role within the business?
yeah, I think again it breaks down. If I just take what Metrikus does and what direct competitors to Metrikus do, is to sell in around understanding how people's real estate is being used and operated, more so than just the energy and BMS. That's a switch and a code and a Johnson Controls and a
Mm.
Siemens and a Schneider, all those guys. If I take the inside of the building where the tenants are, if you can do that without any hardware, and you can do it with just software and pro services, and you've got the right stakeholder, and they've got a requirement to look at building operations or how much real estate they've got, that can shorten the sales cycles massively by months and months and months. And we've seen it by doing it with software only. If you can do it with software only, whether it's using Wi-Fi, using existing systems, and you can just plug in and pull that data and start to give people that data very quickly, sales cycles go from 12 months to 9 months to 6 months, especially if someone's already got budget, they've got a requirement, and they need to deliver an outcome back to the business, or they need data. That can bring those sales cycles right back in.
Mm-hmm.
And I think the more you can do that, the easier it will become for customers to make decisions and start to do projects.
Got it. Okay. Also, as someone who has gone and raised some money, how do you find the venture capitalists, and how receptive are they to kind of prop tech smart building companies in your experience?
I think 2020, 2021, this was the bubble, and everyone wanted to be in this space, and people were giving money out to companies. And I don't necessarily think you had to have a lot of revenue as much as you needed to have a good story. Now, if you look at our space, no one has sold their company and made a ton of money. No one. The people that are getting money now are cash flow break even, or they don't really need the money. No one's getting money if they're not cash flow break even anymore. Most of the investors are looking to de-risk the next investment, because if you look at the space, right, look at the amount of money that was put into our space in 2020, 2021, and even 2022,
Mm-hmm.
and the valuations of some of those companies. the revenues that they're doing now are not even remotely close to get the investors' money back. I won't name the companies that have had money, but some have had 50 million, some have had 100 million. Trying to get the return on investment for that is nigh on impossible in our space. So I think the investors looking at our space now are thinking, wow, none of these companies turned my 20 million into 200 million for me, or even 100 million. So trying to find an investor or a VC or PE company to come in now and say, right, which one of the plethora of companies that are in this space do we give our money to? I think once bitten, twice shy. No one's really turned anything into a unicorn. There are lots of companies who wanted to make a lot of money, but it's become a lifestyle business, and they're treading water. But no one's really gone rocketed to the moon and made a ton of money. And we've seen massive acquisitions. The acquisitions that have been done, if you look at the stuff that Keyframe have done, all of the companies that they said that were acquired, like Infogrid acquiring Aquacore and Buildings IoT, and I can't remember the other one, but and Arcadia, they're all Keyframe investments. So they were paper transactions, they weren't money transactions. I think it's really hard for anyone to get money. People have had money recently, or companies have had money recently, like Code Labs and Swift Connect and others. But I don't think there's a lot of new money coming into this space very easily. I think unless you've got AI attached to it and you're doing stuff with AI, I think for people to open their wallets and give you money, I think is going to remain hard. And I think you almost have to be, if not be cash flow positive and break even before anyone gives you any money. Are people taking a big punt or a big risk in the PropTech IoT space? I don't think they are anymore. I don't think someone's going to willingly give you a bucket of money based on a dream. It's not the old Kevin Costner, if you build it, they will come. I don't think there's probably too many young people who won't understand what I mean by that. So apologies, but no one's going to give you a ton of money based on a dream anymore, right? No. It's got to be, you need to be making money. You need to have a product. You need to have customers, and we might think about giving you some money.
Yeah. I mean, our numbers back that up. Like, I think VC's down 13%. That's number of rounds, 13% in the first half of this year. And as you said, you mentioned 21, 22. Like, again, you can see that there was that was the kind of the high watermark. So yeah, and I think also it's also not like VC money isn't being invested. Right. If you look at numbers coming from Crunchbase, PitchBook, they're saying like it's like 200 billion, right? First half of this year. So that's up, but PropTech Smart Buildings, at least what we measure, is down 13%. Okay, it's not it's not huge, but it's a drop. So it's like it's not as a startup, you're not just competing with other smart building companies for money. You're competing with everyone for money, right?
Yeah, exactly. Yeah,
and they were saying like 60%. Oh no, hang on, let me get this right. I think it might around 40, 50, something like that of that 200 billion has all gone to AI companies.
Yes,
and most of it is just like 10 of them, right? It's not.
Yeah. Oh yeah. It's a closed. It's not a closed network. Wrong term. But if you've got AI in there, you're getting money, and it's the new buzzword. And I think, talking to people like ServiceNow and a few of the other big software partners and customers that I speak to and work with, their investments are around AI. Everyone's investing in AI, but and actually cyber, right? I don't know if you've seen recently that Accenture bought a company out of Australia called CyberCX.
Yeah, I did see that. Yeah.
Right. So AI and cyber is where the money's going. Now, if you happen to be a PropTech company, but you lead with AI and you've actually done something with AI, I think you've got a better chance of getting money. But like you say, you're competing with a much bigger market now than you were before to try and get that money and get the attention of investors. And I think it's harder than it's ever been. It's I read your numbers and I read everything that you guys put out, but the numbers going down, I see, is definitely a trend. And I speak to not as many people as you do in the industry, but I've got people I speak to in the industry, and they're all either treading water, doing business, growing slowly, and trying to figure out where do they get that next round of funding, and can they get the next round at the right value for them, and not just heavily weighted towards the VC putting money in because they actually need some cash. That's the other balance, is if you can get cash, what's the trade-off for getting the cash? How much is that going to hurt your business and your current shareholders?
Yeah, no, exactly. It's not just about raising the money; it's what you give away for that.
Exactly right.
Yeah.
And again, 21, 22, you didn't have to give away a lot to get a ton of money. Now it's the other way, right? The needle swung to the other side.
On the other side, and you kind of touched on it, right, about the acquisitions. So we've seen that grow. Just in the first half of this year, 60% increase in the number of acquisitions. So, sort of the headline there is, okay, people are cashing in. But again, I think that sort of it hides some of the nuances of it, right? Like about why things are being acquired and for what price as well, right? But I mean, what's your sense of what's going on? And I'll let you answer that because I've got a follow up as well.
Yeah. So I think some of the acquisitions are paper acquisitions. I don't think any money's changed hands in some of the acquisitions that have happened, or if it has, it's been a very low value. Otherwise, people would be shouting about how much they've been acquired for. They may not be able to disclose it, but it'll be some very excited people. No one's gone and bought a yacht or a car or a house or has walked away into the sunset and not in our industry anymore, right? So if you take some of the previous ones, if you look at Spiker Technologies that were acquired by Alta Cogni or Nordomatic, sorry.
Mm-hmm.
I don't know how much that was for, but I don't see anyone retiring from that acquisition. And I think there are some partners working with customers that are linked to other businesses that if that partner went down, it would be a problem for some others. So they acquire it, or on paper, they take it for not a lot of money to try and keep supporting the customer base. But I don't think anyone's retiring on any of the acquisitions that are happening in our space.
Mm-hmm.
There's just I don't think the companies are getting the return on investment that they thought they might a couple of years ago when the valuations were through the roof.
Mm-hmm.
I think it's a hard market. I think they're growing, but they're not growing at the pace they thought they would. Going back all the way to the start, what would I have loved to have known is how long and hard and painful the sales cycles are, and you then plan for that, because then you'd run multiple streams of customers. You go for the tier ones, the tier twos, and the tier threes to help grow that revenue. I think everyone's kind of gone all in one area and realized now they need to spread the sales channel pipeline to try and drive the revenue. But that hasn't helped with the valuations of the company because you've got to try and keep the lights on. But keeping the lights on doesn't mean you're making a huge success. So I think there's been more and more acquisitions, and I think there will be more and more acquisitions. But I'm not sure the acquisitions will be for a lot of money. It might just be because partners can't let customers down, and they're using a product from a smaller company that they still need to make sure services a customer.
Yeah. Okay. So, so fewer opportunities perhaps for, a good exit, whatever that is. But what are the real kind of options there, right? Because we look at IPOs, and I think it's basically there weren't that many anyway, but realistically that's dried up, and like a lot of people jumped on this SPAC, special purpose acquisition
that came and went very quickly, right?
That's sort of not in favor anymore. So that seems to be off the table. So what's left?
I don't think. Well, I'm not sure anyone in our industry is doing enough revenue to IPO. I don't see any. Not at the moment. Maybe in a year or two's time. I think so. I think more acquisitions will happen. And again, for what value, I don't know. I think the companies that are growing, the wallets may open back up again from venture capital or PE in 2026. I think it's survive 25. I like 24, it was survive until 25. Then no one realized what would happen with Trump, and some of the decisions that were made would make 25 even harder than 23 and 24. You've got to survive to 26. I don't know how many new entrants will come into the space. I don't think it's going to be a lot. But I think there will be a few, but I think consolidation will happen a lot as well. Or maybe not a lot, but I think consolidation will happen. I think we'll see some natural attrition, and then I think we'll see some acquisitions. Now, the acquisitions, we'll see what sort of values they are, but I think if people are growing and they're doing well, then they might get a decent amount of money. But I think 26 is going to be interesting. I think some attrition, some consolidation, and some acquisitions, but of what ratio yet, I'm not too sure.
Yeah, no, I think that's a good summary. I think on the IPO thing, I agree. But also, I think, like public markets, they're more receptive to kind of like annual recurring revenue, like consistency. And I think a lot of what is, goes on with smart buildings, it's not, it's kind of like maybe software, hardware, services revenue, and you get some of that kind of like project lumpiness, and it just doesn't look as attractive to public markets.
No.
And that doesn't mean it won't happen. But like, I can't see there being like, a massive increase in that. But, one or two might come to market in 26, 27.
I think so. But also, if you look at the whole market in general, I don't think anyone's doing enough revenue-wise annually, ARR. So if you peel away the lumpy stuff that you're talking about, the project costs, and if you have to buy hardware, you strip all of that out, I don't think there's anyone in our whole industry that has enough ARR to do an IPO. As you say, it's if everyone, you get some really, I was about to say a swear word. So if you get some really,
you can, it's fine.
It's shit hot. We get some shit hot finance people going through everything, and they really dig down into the layers. You see that, let's just say someone's doing 3 million a year total revenue, or 4 million, or 5 million. You peel back the layers, the ARR is probably only 30% of that. That's then a much lower number. And then how do you take that to an IPO and say they're 5 million of revs, 30% of that is the ARR? Well, that's a big chunk away. That's 70% gone year on year that you have to go and find to keep that revenue growing, and your ARR is only growing at 30% a year. That, that's not very sexy to sell and try an IPO, right? If you're a pure SaaS business, and like everyone in our industry that says they're SaaS generally does pro services and has to provide some hardware somewhere, whether you're Metrikus or whether you're an IoT hardware vendor who all say they have a platform and they're a software business, but you can't be that if you actually provide hardware as well. So I don't think the mix is right in our industry yet for it to be the perfect storm to go an IPO. And as you say, as we talked about earlier, the sales cycles are long, it's very lumpy. Someone doing the DD on any company will say that this seems like a lot of hard work, and is it worth the risk to go in on this? I'm not so sure. And if you look at the whole industry and you look back at investments and the amount of money that's been put in to some companies, and their valuation now is very different what it was 2 or 3 years ago to what it is now. So it's not a company, it's not an industry that's doing that. It's kind of did that, then it's done this, and now it's doing that. So where's the inflection? Where's the next inflection point? And then if we get to an inflection point, then I think some IPOs will happen. But I think you're probably a year to 18 months away from that.
Yeah, no, fair assessment, absolutely. You haven't mentioned strategic acquisitions. Like for me, that still seems like the best prospect for companies, right? If they're looking for an exit.
Yes. I think there probably will be some of those. That's, when you look at the attrition and the acquisitions, I think some of the big companies are now realizing they need to be a little bit more nimble. And how do they become nimble? Well, they acquire a smaller company that's taking some of their bigger customers, got a much lower cost to run the business, a different cost of sale. How do they absorb those in to buy a customer base? They absorb those in to understand how they run at a much lower cost. But these big companies, it just costs them more to run their business, right? But strategically, if they need to do something that a smaller company is doing that they know will take them 2 years to gear up to do and cost them 10 million, if they can buy a company for 20 million and get it in faster, I think that will happen. But
Yeah.
who is that going to be, and who's going to acquire who? I don't really want to
No,
throw any
sure. And
predictions out there at
we
the
don't.
moment. I do think there will be some, and I do think there are companies that I think will be acquired strategically. But are there going to be lots of those? I don't think there will be lots, but I think there'll definitely be some. Yeah.
I mean, look, exactly what I was going to say. Like, there's also a finite amount of that opportunity, right? Like,
Yeah, exactly. Yeah.
there aren't that many, big companies with deep pockets out there. Because once they've bolted on the bit of software or whatever it is that they want, then obviously they're not going to be in the market for any more.
Yeah.
I mean, there's a couple of different types. I think, like, for example, Train acquiring Brainbox AI.
Yeah.
Like, I think that's a good example of a bolt-on kind of tech acquisition, especially with the AI. So I don't know the details of that, but I imagine that was a pretty decent exit. I don't know.
I've heard it was a decent exit. Yeah. I don't know the numbers. I heard secondhand. I haven't heard from anyone at Brainbox, but I've heard secondhand it was a decent exit.
But then there's sort of the other piece I see as well, like where some of the bigger strategics, like, they've got their own challenges in the business, right? Like they've made promises about like growing their software businesses.
Yeah.
And, the shareholders want to see progress there. So, sometimes there are these like kind of bits of, acquisition where they're basically just buying software revenue.
Yeah. But again, I don't, so I agree completely. But again, if you look at our whole industry, who's got enough revenue to move the needle for one of these big boys from a revenue perspective? Take, JCI bought FM Systems for a decent chunk of money, and FM Systems had great revenues. The overall moving the needle on revenue, though, for JCI, who's billions a year of revenue, that was still a small amount, right? Accenture buying CyberCX for $1 billion. CyberCX had hundreds of millions of revenue, but again, look at the size of Accenture compared to CyberCX. They bought them for a lot of money. They had a lot of revenue. That's a really fast-growing space. So that's an acquisition that makes 100% complete sense from a strategic perspective. In our industry, I don't think there's a CyberCX. So I don't think CyberCX has been around a long time, and JP's grown a phenomenal business. They were growing and growing and growing and accelerating and accelerating and accelerating. I think the difference between CyberCX or the cyber industry and AI compared to where lots of little companies like us play, no one's skyrocketing like CyberCX to have a really healthy exit. But I think there's an opportunity for the bigger companies to make a strategic acquisition. But like you say, there aren't many of those big companies that are going to make many of those strategic acquisitions. And if they make one, they're not going to make another and another, right? So I think the rest of this year, companies will look at the market, look to see who's growing, look to see who's growing the fastest, look to see who's got a good balance sheet and what sort of customers they've got, and make maybe those acquisitions next year. I don't see any of them happening for the rest of this year. But I could be wrong.
Sure. Interesting point. Yeah. So I was going to ask you two sort of related but kind of separate ones about advice, right? So first of all, founder thinking about starting a PropTech company who's maybe not quite push the button. But what advice would you give them? Number one
Think
question.
long and hard before pushing the button. I'd think long and hard. Have a look at our whole industry. Unless you've got a kick-ass product and a problem to an existing solution, don't try and build a solution and find a problem. Unless you've got something that solves a real problem, I wouldn't even start. You know, it's a hard market to break into. I think some customers have been bitten, and now once bitten, twice shy. I think there's a lot of companies in our industry that are lifestyle businesses that want to be more but just can't get there. And I think the VC money that we were talking about, they're thinking a lot more before they put the money in. So you know, if you wanted to get into the PropTech IoT smart building space, what's the differentiator between everything that's in the market already? And have a long, hard look at that and figure out what you think your differentiation is. And then if you think there's a differential, what's that differential? And then if there's companies that do some of what you do, how much of it do they do? And if you come in, how quickly could they copy or do it? Or one of the bigger companies could just say, that's a really good idea. Let's put 20 engineers on that and go and do that ourselves. So I'd say take a long, hard look before you try and do anything, you know, if you think you're going to start one from scratch in the industry, because I think there's a lot of people with battle scars, right? All of us in our industry. I talk to a lot of people, as you do, and everyone's got battle scars, right? Everyone talks about the long sales cycles, the customers changing their minds, budgets being pulled away when the project's already been agreed. You know, there are some RFPs that we've won and others have won that the project never actually kicked off. So we live in a strange world in our smart buildings, workplace, real estate bubble. I've never had that before in another industry where I've won an RFP, but the project actually never went ahead. You know, and you know, I've talked to others in the space, and they've had it as well. So I would say if you're gonna come in, take a long, hard look, come in eyes wide open, and be prepared for hard work.
I've got one more question, but I'm also going to make you say something positive at the end here. So be prepared.
This is not meant to be doom and gloom, by the way.
Exactly. Same question for like a company that's say 2 years in, startup. Maybe they've raised a seed round. They're seeing, you know, some green shoots. Like, what advice for them?
Follow the green shoots, and if you can grow those green shoots, if you can get a customer to go well, they will scale. And there are some companies in our industry that are scaling and doing very, very well, right? When I say very well, doing better than anyone else in the industry. You know, are they becoming unicorns overnight? No, but are they starting to grow and do things well? Yes. And I think when you get a customer that becomes a proper partner with your business, amazing things can happen for both sides. And I think if you see those green shoots, customer success, listening to customers, growing your product and building what the customers are prepared to pay for and grow that part of your business, I think they'll be very successful. And I think customers will grow with you. Customers are prepared more so than ever in kind of history, I think, to take a risk on a startup if they're providing good service, a good solution, it does what it says on the tin and it works. Then I think get the green shoots going and grow those, and then continue to focus on those. Fast fail. But I think in the next few years, if you can do that, I think there'll be some really successful companies in our space, but it'll take a bit of time. But I think then there will be proper success.
So you kind of just mentioned there some of those companies where they are seeing traction and they're definitely growing. And then we mentioned earlier the ones that are probably treading water, lifestyle businesses, probably not going to be able to raise more money. What's the difference in your opinion between the two? What has made the difference there?
I think the ones that are growing have really concentrated on some of their core customers to drive the ROI back into those businesses, and they've created champions out of those customers. And then those customers will happily go and speak to peers or other people and say, hey, we've been working with X for 2 years. This is now the return we're seeing, and they become champions and they go and talk to others. That's what I see happening. And there are 3 or 4 businesses out there that I talk to regularly, and we keep in touch in general just to see how everyone's going, that are actually really starting to grow. Now, again, are they properly taking off and doing this? They're doing that, but that's because customers have become proper champions, and customers have become partners, not just a customer. I think that's really important. I think if you're providing for your customer and you're doing what they need, you will always get a champion in a customer. But if you get more than one champion and you become partners, that's what will help you grow, and then they'll start to sell it for you.
Yeah, very good advice. All right, so I warned you, leave me with one positive aspect of
Well, I thought we
smart
just did a
buildings.
little bit of
Come on,
positive.
one more.
I think, and I was just talking to a friend of mine from JCI literally before I came here. There is a massive opportunity in our market, and I think there is genuinely a huge opportunity. I think the opportunity is to get the landlord, building owner, and the tenant occupiers together and create a partnership between those 2 relationships. Whoever can do that as a software provider, as a platform, that will make things grow faster than they've ever done. I also think the best thing for our industry, and I keep talking about this, as does Michael Pasula, we need to partner up in our industry. If we partner up, there are more than enough buildings to go round, right? Like there's 600,000 commercial buildings of 10,000 square feet or above in the UK. There are 6 million of those in the US. Now, whether you want small retail commercial buildings, whether you want warehousing, manufacturing, or whether you want office buildings, no one can do even just the US. But if we all partner up and we play to our strengths, there is a massive opportunity to bring the landlord and the customer together to provide them both the data they need. Number 1, to make the buildings more efficient. Number 2, for customers to understand how that building's being used and to get a lot more direct feedback, either from an application or the landlord or the tenant, to make this a really successful industry. From that, I think we will grow and grow and grow. Partnerships will grow and grow and grow, and trust will grow and grow and grow. And then I think over the next few years, whoever properly partners up, properly builds trust, will be very successful. And the great thing about that is the outcome for the landlord and the tenant occupier will be a better relationship and more buildings digitized, more buildings that become sustainable, and office spaces being used the way it should moving forward, which is a lot more flexibly than it is today. So there is a massive opportunity. I wouldn't still be in this industry and still, working in the space, although I'm moving on from Metrikus. There is a massive opportunity here. It's just, how do we get those relationships to work better together? I hate to use the word symbiotically, but symbiotically, because I can't think of anything else, to provide a better outcome for the customer, whether that's the landlord or the tenant occupier. We will do that better together in partnership than trying to fight each other and going alone. But there's a massive opportunity there.
Yeah. No, excellent. And thanks for that. We should also mention Smart Building Bootcamp.
Yes. So
tell us what that is.
Thank you. So Smart Building Bootcamp is something that Matthew Marson and I put together, where everyone's really busy in our industry. Like, whether you're on the tenant side and you're the head of workplace, the head of real estate, or the head of FM, or you're on the landlord side and you're the head of operations of facilities, you still need to learn. You need to learn about smart buildings. You need to learn about the evolution of our market, what's coming, AI, smart building technology, changes in the industry. So we get asked about it a lot. You get asked about it a lot. How do you educate people that are time starved? So we put Smart Building Bootcamp together so that you can do a self-paced education and learning for about all things smart building. And it continues to grow. We've got AI, MSI, Master System Integrator, coming out, cybersecurity, and ESG. So 4 new programs coming out because the evolution of what we're doing. So self-paced, ongoing learning for people in the industry at a good price point, because no one wants to pay 10 grand to do a smart building course or try and educate, but they do want to stay in touch, and making it affordable for people who are busy is always helpful. So self-paced, up-to-date learning to help people in our industry learn more, because you get a lot of questions, so do Matt, so does I, so do a lot of people in the industry. So it's somewhere, and also creating a common language across our industry is the other reason we built it.
Good. Okay, and it's smartbuildingbootcamp.com.
Correct.
Good. All right, go and check it out. And Michael, that was an awesome chat. Thank you very much for taking the time.
Pleasure, mate. As always, it's great to be on. And again, thanks for inviting me, mate. And we've ended on a positive, which is what you've asked
Yeah,
for. So.
yeah, absolutely. And if you're still listening out there, then hopefully you've enjoyed it. And if you did, leave a like, please. Share the video. That would really help us out. Thanks very much. Bye for now.